Traders, welcome back to our price action trading lesson. We started with bullish uptrend working higher. We have a break, move to new high. We have a new high where I'm going to reset the count. If I want to count for longs, they're going to fail. The reason why I'm going to consider long setups failing is because the uptrend played out with the break at new high, which means the bullish trend played out. Push below EMA is right now confirming there can be bearish reversal. You have a first entry long, pullback, second entry long. Market tends to move in pairs of twos. But this second entry short, that is also felt second entry long, formed right around the market open. Now it's slightly above EMA, but it's not that big of a deal. You can still consider selling, but because it is exactly around the market open, we can't really take a setup around the open. Market created significant second leg down. Now, generally 8 or 9 times out of 10, when the second leg down is so much longer than the first one, there has to be some bigger downtrend, for example, something like this. And because I follow the rules as a price action trader, this is what I'm going to focus on. You can see how long the second leg is, really indicating, okay, many times there's going to be wider downtrend. But we are breaking above EMA. I have to withdraw the short-term uptrend. There is no second entry short, new low. There's not even a first entry short actually. But notice how far we retraced. So this is definitely not a good sign for me if I expect new low to be tested. So already I'm a little bit uneasy right now because is the downtrend valid? What if this is just prolonged break and a new extreme? But we have overshoot of the trend channel line, so we can have stronger pullback in the opposite direction. I cannot take lower high simply because this uptrend doesn't have new high. So I have to be a little bit careful. I'm going to redraw the downtrend working lower. So now it starts to look like that, okay, we may test the new extreme. It's a little bit whipsawing up and down, so definitely bias is not there. But if I see a little bit unclear structure like this, I'm already preparing myself to be more patient because we're just whipsawing up and down. Trends are not as established. There is no good setup. Doji above EMA, quite stacked. Nothing really here. Cannot sell above EMA, of course. And we're going sideways. And now, okay, uptrend played out with the break and new high. So at this point, prices move so far from the initial downtrend. I can go back in hindsight and redraw the channel, thinking, okay, there's a break, a longer push to a new extreme. I'm gonna keep it here simply because it makes sense, but because we retrace so far, I'm no longer expecting new low to be tested. Remember, this is some bigger consolidation. This is just a smaller, weaker trend. So right now, I have no other option but to focus on this local price action. There is no bigger structure, and I just have to follow every individual trend. EMA is flattening, so there can be some consolidation, but nothing that is proven as of yet. Okay, we are working lower. I'm going to redraw the downtrend that is working lower. We don't have new low technically. And now we have actually a new high, first entry long, failed, second entry long failure. Now this is actually quite tempting because the signal bar is perfect. The downtrend needs to get new extreme tested. So this right here is a failed second entry long. Problem is, we almost had micro double bottom, not textbook setup. I know that some traders like setup like this. Decent setup, you expect new low to be tested. Break, push to new extreme, downtrend played out with the break and the new low. So what I'm gonna do, I'm gonna mark my new low. And because EMA keeps being flat and we pushed above EMA, I'm gonna redraw right now a small consolidation. Because my goal is not to only analyze the micro structure, the micro trend, but also the slightly bigger structure. And I cannot deny the fact that we are swinging up, down, up, down. So now the market is in a consolidation. Downtrend played out. We push lower again. And now we have strong bounce off the support. I can move a little bit lower, adjust the key level. It's important to be close. You don't have to be perfect. And this is a decent setup. When I was watching this live, I was a little bit concerned why we broke lower. But looking back, this is good setup because the support is holding so strongly. There's empty room at the bottom. Market keeps working high. I'm going to redraw the short-term uptrend. So right now what's going through my mind, trading range rules, okay? But the market is in a consolidation. I want to buy low, sell high. We have a new low, first entry short. So ideally, I would like to see second entry short at the key level, which would also be triple test, multiple test. Can I get a second entry short there? I have a second entry short here, but unfortunately it's not full at the key level. Now, you can make a case for the key level being a little bit lower, but still, it's not fully close to it. You know, this looks like a one spike working higher. I was really hoping you get set up like this, much closer. You know, you can take a risk, especially if you're playing key level a little bit lower, but it's a bit more aggressive simply because, you know, you can see this key level seems pretty strong, and you really want to see the broader break, push the new high, and then sell. You're working lower. Now you're really expecting prices to continue going all the way down here, and it didn't. Prices reverse all the way back up. Okay, why are we struggling to go to the bottom? The momentum is too bullish, so I gotta be careful. There is no multiple test again because we completely blew past this key level. I can measure the one leg and project where prices are most likely are heading. I was still looking for a lower high below EMA or for second entry long. Prices continue working lower. And now I'm going to zoom out. There is some bullish imbalance, but also we are at the high of the important key level. And not only we got rejected off the high of the important key level, we have small consolidation right here, and we have a failed breakout. So one leg break, second leg. You can see how sideways the structure is. And once we have many times a small consolidation that is very close to the main key level, we are really most likely going to go back into the trend range. You know, there's a chance there is some channel like this, but I don't really like it because, you know, this is so sideways. Most breakouts fail. There are a lot of two-legged pullbacks, main key level. So I actually drew my trend line wider like this. I was hoping the second entry long bulls are going to get trapped because we're really coming off the range highs, failed breakout. Now we have a failed second entry long, which is decent setup. It's a little bit above EMA, but in trend ranges, that can happen. Failed second entry long. And now we even have a lower high confirmation setup. Lower high. This one is a little bit more congested now because prices are going sideways, but it really looks like the bulls are going to get trapped. Take high reverse down due to the stacked area, a little bit more aggressive, but the wider channel seems fitting well. It was a quick scalp here. New low, only first entry short here. This is the lowest low, lower than this, so I'm going to reset the count. And market continue working higher, and it kind of negated my analysis. When I'm looking at this, I have to accept the fact, okay, there is more of a bullish bias. This downtrend, in hindsight, is a little bit too broad. It's not going to get new extreme tested. By the way, that's a great thing about scalping, is that you can be wrong on the bigger direction where the market's going to go, but you can still have a winning trade. Scalping, small portion here, small portion there. So this is why scalpers overall can achieve much bigger win rate than swing traders, because you can sneak in here, sneak in there, and get your scalp and get out, even though the market momentum may shift. Of course, swing trading has its benefits as well. It's about personality, what fits your style, but this is one of the advantages of scalping. And now because prices continue working higher, and this downtrend was negated, no new extreme. Why there is no new extreme? Why this broad downtrend negated? There has to be explanation, and it's most likely because there is some bigger pattern. The reason why I like drawing now this uptrend, number one, I have to explain the fact why this downtrend will not get a new extreme and why prices are working higher. But number two, you can see, notice what is happening here. So much rejection in no man's land. A lot of times we'll set a good foundation for possible trend line. So really the trend line is fitting here well. We're going to copy it. But at the top, we have overshoot. So we can expect stronger momentum in the opposite direction. We have a second entry long, but after overshoot, I have to skip the very first second entry long, especially since we were going sideways the entire day. Had this been some massive strong uptrend, you can definitely approach it a little bit differently, but we just broke out of the messy, choppy consolidation, so I'm definitely going to lean more towards overshoot, so I have to skip this. Prices are creating lower highs, lower lows, so I'm going to draw this unorthodox wider channel. Break, new extreme, downtrend played out, massive push above EMA is confirming now. Okay, we need to test the new high. Can I get a high-low confirmation setup? New low, no break below, no break below, no break below. Had there been one tick below, first entry short, failing, we would like to be entering a high-low confirmation setup. We need to get new high, but on my chart I have no tick below. So no entry for me. And once market forms new extreme, I have to pause looking to go long. Now we have new high, first entry long, pullback, second entry long failure, reversal pattern, it's below EMA, uptrend played out, which means we can expect new market cycle, and this is felt second entry long, but this was super quick, very hard to catch. You can see there's a gap, which means it didn't even came back, it just closed here, opened, and all the sell orders came in and market just plummeted lower. So your limit order would not get filled if you just try to sneak in a little bit further back. Okay, market keeps working lower. We have a second entry short while the downtrend needs to get new extreme, but the signal bar is bullish. I cannot sell below bull bar. You know, the double bar is quite big, and now this brings us to the close. Price action is stalling and market is about to close. So this is the overall structure for today. The choppy price action continues. It's now been 4 days with this choppy, difficult price action to navigate. I can't even remember the last time we had so many days in a row where price action is so choppy and so difficult to navigate. It's definitely going to go back to normal. It always does every single year. It's the same, but you're going to get bad day here and there. That's normal. That's part of trading. But generally you're going to have good day, bad day, good day, good day. But now we had almost the entire week of very choppy price action. We always go into some weird form of consolidation and we never get a good pattern established, and everything is so slow, so choppy that there's no good pattern established that we can count on. So definitely one of the most challenging weeks, mainly boring weeks. Not that there are that many traps, which some trades are quite choppy and trappy, but for the most part there's just no good structure for you to gain confidence in that you're reading this correctly. A lot of conflicting variables. You can see you're just chopping up and down, slight bullish bias. It's definitely not that easy. I can't even imagine what it must be like for a novice trader. If you're a novice trader and you are struggling this week, just forget about this. Put this behind you. Don't even bother analyzing your performance. This is not a good sample size of trading days because this week has been very slow and choppy. It's not even worth gauging your performance. It was so slow. So don't even bother analyzing your performance. Definitely don't get discouraged, because if experienced traders are struggling to gain confidence in this price action, I can't even imagine what it must be like for a trader that is just learning how to trade and learning how to read the price action. This is a skill. It takes time to understand what the market is doing. It's like learning a foreign language. So it's going to take time. And if you're new, this week was super confusing. So if you were doing bad, if you're doing poorly, truly don't let it get to you. It's not that big of a deal. This is not a normal market, super confusing market. In fact, I'm 100% sure this week I have taken the lowest amount of trades I have ever taken. I have taken so few trades this week because so many conflicting variables. There is almost no good pattern established where you can be confident. Just every single day is the same. You just start out pretty solid. It looks like it's going to be a good trading day, and then you just go into some weird consolidation that doesn't really hold. It eventually just tilts to one side and the trends are weak. Nothing is that confirmed. And when you have good setup, signal bars were reported was also pretty common this week. So definitely very unusual. I can't remember the last time we had the entire week that was this challenging. Once again, it's normal to get a bad day here and there, day or two. That's going to happen. That is part of trading. Market doesn't care about us. We cannot feel entitled. But this has been definitely unusual price action. So what you have to do when the structure is this choppy, just get out, take a break, breathe fresh air, and you will come back and you'll be surprised how less frustrated you're going to be after a break. In fact, when the structure is this choppy, we need to keep taking more breaks because it is so easy to get lulled to sleep and take some impulsive setup simply out of boredom. So you have to take more breaks. Trust me, you're not going to miss anything. Market is slow. And it's better to miss a setup than to end up taking impulsive setup just out of boredom, or because sometimes you want to vent and you want to take your frustration on the market. Why are you giving me this choppy market? You have to remain objective. You have to remain professional. Market doesn't care about us. We cannot feel entitled. So don't lash out. Don't take it out on the market because market doesn't care. That is not a good thought process to have. So like I said, don't really analyze your trading performance based on this week. Very unusual price action, very slow and choppy, not that many setups, even for advanced traders. So definitely don't get discouraged if you are a beginner trader. Hopefully, new week will bring some momentum, some structured price action, so we can have some good patterns. It always happens like this. So enjoy your weekend, take it easy. You can go through some price action to practice, to learn how to draw channels, to journal, go back test something, but mainly relax and get ready for the new week. So you have clear mind and you can capitalize on a good price action that's gonna come. So I'm gonna wrap it up. I hope you had a good trading day, and I'm gonna talk to you next time. Good luck with your trading.